Hello, welcome back. You know, people are addicted to drugs, some people are addicted to gambling. I am addicted to buying stocks at a low price. And this is why I just bought just four really, Alphabet shares. I was looking at the stock market today and basically trying to find what I think are bargain prices right now. And I was looking at Alphabet, and I have talked about this stock quite a few times in the past. But as it's going down, I definitely wanted to make a new video and address the current situation because just a few days ago, look at this, April 4th, it was actually almost 3,000 or near that. And right now it's sitting at 2300, and this is where I bought basically today, just now, as I'm making this video. As I said, I bought four shares, and I am gonna take you through why I bought four shares of Google and why I think the company is doing amazingly, and why I believe it's a fantastic investment right now, even as the markets are basically crashing right now. So the PE ratio of the company is sitting at 22, and look at how far it's gone. It has been much higher for a long while now, and now it's sitting at 22, which is very fair. Now you see an X here, but the software here, our tool, automatically gives an X to everything that's above 20. Of course, you have to use your own judgment and make your own decisions. And 22.2 for a company like Google is more than fine with me. I'm absolutely delighted to have gotten more shares of Google at that price. Actually, I wasn't a holder of Google. I have traded it in the past, so it's actually the only shares that I'm holding right now. But if it keeps going down, I may think about getting more of it. I have done a lot of purchases as the stock market goes down right now, and I'm actually quite happy with those. I just can't stop buying. I don't know what's with me. I just love for cheap stuff. Price to free cash flow ratio similarly 23.6 here, pretty great. But just these values won't tell us the story. We will be using our stock evaluation tool, and this will tell us exactly what we should be paying for the company. Now, the outstanding shares, look at this one, amazing. 56% down in the last 5 years. That's insane. Of course, Google is undervalued, as you will see in the rest of the video, but it's down 56% of its outstanding shares count. This means that if you bought shares in 2021, basically a few months ago, now your shares are worth more, and as the stock price goes down, they're worth even more. And so it's amazing to see, and seeing this figure here gives me even more hope and gives me more validation about my purchase here. Another thing, free cash flow to total liabilities. It would just take 1.6 years for Google to pay all their total liabilities just by using the free cash flow of last year. This is absolutely insane, right? They basically have no debt. Look at this revenue growth, even though they are a behemoth, from 110 billion to 257 billion. This is nowhere near the dot-com era. This company is making tons of cars, and it's very cheap right now based on what we're seeing here. 5-year net income growth is increasing tremendously as well. Free cash flow growth also tremendous, and equity growth also increasing. Pretty much great key metrics here. There is nothing really that I see that is wrong with Google. Everything looks amazingly good. Again, the price to book ratio can be elevated. This is something that you typically see with companies of that sort, like software companies like Google, for instance, could do that. No big deal. Microsoft, for example. It doesn't really affect me at all. What I do care about a lot is the net income margin, for example, 30% is amazing. And the returns, look at these returns on invested capital, on equity, fantastic returns, fantastic valuation, pretty much cheap stuff. And so let's take a look at the stock evaluation tool. I may sound a little bit delighted about my purchase, and I am, because I did get it at a cheap price. Revenue growth, look at this one. It has been at around 22. At some years it has done 12. So because of that, we're going to go relatively low. And 12 is going to be the lowest number that I'm going to be using. So I'm going to go 12 here, 14 and 16 is what I'm going to use. Now the net income margins, you can find the table here, are going to be at around 20 for the most part. For the lowest estimates, 20, 22 and 24 makes sense. Free cash flow margin here, again, the company is sitting at around 80 to 90 to 100%. So this is what I'm going to be using, 80, 90 and 100. And 13% is what I want to be making out of any single stock, because I can get 10% out of an S&P 500 ETF just by holding this. I'm taking up more risk by holding any stock, and this is why I want to be earning more profit out of my money. And this is why I'm using 13%. And I hit calculate here. You will see that at this valuation, even our lowest estimate here is sitting at $3,000, while the current price is at $2,300. This is absolutely insane for me, because you have to realize that I only make purchases and trades based on what the fundamentals are and what is what the free cash flow that the company is generating. This is super important to me because I don't really care about what's happening regarding the news and what's happening in the overall market. I don't give any attention to this one because it is irrelevant. This is just for videos that some YouTubers make. This is just for hype. It's irrelevant to actually making money and being a successful investor. When you want to be a successful investor, what you want to be doing is buying low companies that are actually amazing and are creating tons of free cash flow, tons of net income. They are doing pretty much great. They are increasing their balance sheet. Pretty much everything looks amazing. And look at these valuations here. The high estimates, which are sitting at 16% revenue growth. Look at these averages here. Do you see 16% anywhere? The lowest one is 23. That's the 5-year average. And I'm using 16 here. And yet we're getting 5,000 for our high estimates. This tells you that the current valuation for Google is absurd, is absolutely super low, and this is why I bought more of it. And frankly, I'm actually even thinking of buying more. I think it's a fantastic opportunity right now for a company of that sort. And again, I don't pay any attention to what is happening right now. Stock price is going down. That's a blessing for me. You know, some people may be scared, may be thinking about selling. I am buying here. That's definitely what I'm doing, and I don't even care whether the stock market is going to be down even more. It's possible. There is inflation, there are some risks. That's okay, it can happen. But I am investing today for the next 5 years, 10 years, so I don't really care at all. That the thing that I only care about is actually buying these amazing companies at a cheap price, and this is what the tool can really help me with. And as you see here, I just got Google at a steal price, pretty much. So tell me what you think about Google. Are you buying? Are you selling? What do you think about the company? And yeah, just leave a comment and let me know. And please remember to leave a like as well. That really helps. And if you're around, remember to be a subscriber, because on Monday I'm actually opening up this tool for subscribers, viewers, pretty much everybody who's around. And you may want to stick around and become a subscriber. Maybe hit the notification bell, because I will let you know how to access the tool. It's going to be available to Patreons coming Monday. So this is a couple of days. Stick around and I'll let you know. Thank you for watching this one. I hope you enjoyed the video and I'll see you soon. Bye bye.